Well, when talking about investments, one area that is often overlooked is real estate. In this morning's Economic 360, Business Courier publisher Jamie Smith and Mike Dennemann, U.S. Bank Senior Portfolio Manager, discuss the importance of real estate as an investment and how to include it in your portfolio. Jamie, Mike.
Thanks, Peg. Mike, thanks for being here today.
Good morning.
So tell me, why real estate in your investment portfolio, and if so, is it even possible for most investors?
Sure. So, yeah, many investors will tell you that having real estate in your investment portfolio is a wise idea. It certainly helps with diversification. It can be a nice source of cash flow. But you're right, it can be cumbersome sometimes for the average investor to include that. There's two methods, direct and indirect. Direct meaning you own the real estate outright, and for most of us that doesn't go any further than our own home.
High cost entry there, huh?
Yeah, for most investors it's not feasible to go buy a shopping mall or an office tower. So that leaves indirect, which means via securities. And luckily there are just a wide array of securities available out there that give the average investor with even just a modest budget the ability to invest in some of these large and more complex real estate investments.
Okay. Is that fairly easy to access? I mean, that information, I'm assuming it's all out there, but how hard is it for me as a, a rookie to go out and invest in that?
Sure. So yes, it's something that's readily available, very common. The most common are what are known as real estate investment trusts. We're known by their initials, REITs, pronounced REIT. And these are very similar in nature to stocks. In fact, they trade on the stock market, and they are essentially companies that they don't build cars, they don't manufacture soap, but they invest in real estate. Perfect. So there's any number of them out there, and they go from being very specific in terms of focusing on just, say, apartment complexes or storage units. Some are specific geographically, and then there are others that are very wide-ranging that encompass a wide range of real estate projects all over the country. So there are very many out there, and whatever niche of the real estate market you might look to invest in, you're going to be able to find a REIT that's out there to cover that.
What are the advantages or the disadvantages of investing in these?
Well, one of the big advantages, of course, is that there's, like you said, low barrier to entry. You don't need a lot of dollars to get the real estate that you're looking for, that exposure for your portfolio. And as I mentioned before, cash flow can be a big benefit as well. REITs have a unique tax structure which allows them to pay more in dividends than a regular stock. So finding an REIT that yields 3, 4, or maybe even 5% is not uncommon. So that's very attractive in this day and age. And then certainly the diversification is important too. Even though these trade like stocks, they're a completely different asset class. So those two markets don't necessarily move in tandem.
Okay.
So a REIT can be a nice offset in your portfolio to the volatility of the stock market. One big downside, though, potentially, is that you have to remember that the underlying assets here are in fact real estate. So if we were to return to, say, a 2008 type of scenario, that would be a very bad environment for REITs. But again, just from a wide-ranging, long-term point of view, including real estate is oftentimes a wise move.
Well, great. Well, Mike, thanks a lot for being here today, and we look forward to seeing you on the show again soon.
Thanks, Jamie.
Great. Back to you, Peg.
All right, thanks, Mike and Jamie.